Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Tuesday. Still got might be a little bit quieter, kind of like yesterday. I mean, not that yesterday was quiet, but like there's not as much going on. Okay, we got a CPI tomorrow. Man, my brain is not going quite yet, is it? Well, let's come and check out what we got going on in the overall market here. Treasuries had that sell-off yesterday from the Japanese yen. I think was the primary driver. Looks like they've kind of recovered that impulse down. Here, the equities fared okay yesterday. Like another short covering rally, I think, in here. Oil at the bottom of its range, but still looking good. Natural gas having a little bit of a jump. Gold and silver having a good day yesterday. Man, silver looks so good. The top of that range there. And copper, well, copper had that head fake, but like, man, that's a little volatile. That's a little, that kind of action makes me sick. And Bitcoin having a little bit of a jump yesterday. It's not too big, but 30K isn't bad, right? 30K isn't bad. And the dollar having that huge run up and coming all the way back. So even though we had some fairly notable moves yesterday, everything is still kind of, I think, where we were at the beginning of the week. How do you use the curve to tell which instrument to trade? If we are steepening, you buy 5, sell 30. If we are flattening, you sell 5, buy 30. All right. So Bitfinex, whenever you see nice puff pieces written about crypto scammers, remember that people will pay for positive news articles and stories about them to launder their reputation. Yep. Maybe that's what I need to do, is I need to pay Bloomberg to write a story about me. Man, my baby, he's got a runny nose or something, and he has just been flipping out this morning. That's why we're a little bit late. By the way, we got everything going here correctly, right? Yes. Okay, cool. The agency broker hug, the challenge of retail size electronic fixed income trading. From fixedincomdesk.com. Let's read this. Fixed income execution has traditionally been very complex and comparable to an art. This is due to a combination of the breadth of factors involved, such as size, liquidity, credit, the number of ISINs involved, and the lack of listed markets, requiring the manual aggregation of fragmented pools of liquidity. Orders have typically been sent by large institutions for conspicuous sizes. The development of electronic platforms has gradually increasingly changed this landscape, with a growing percentage of trades now executed electronically. In 2021, nearly 80% of daily trades were executed electronically. Why do you restart platform every day? What do you mean by that? How can you tell that I restart everything every day? Well, I don't turn off my computer, but I do restart my trading applications, especially NinjaTrader. Just in case, I mean, Jigsaw probably doesn't need it, but just in case there's some sort of a memory problem, memory leak or something. Plus, I do stuff afterwards, right? I use it for other things. I use the computer for other things where I want the processing power, so. The 2020 COVID pandemic started to contribute to this trend, marking new record volumes in trading fixed income on electronic platforms. As a result, we have experienced a continuous trend towards the reduction of average order sizes, driven by the increased opportunity of handling these orders on platform. In parallel, the recent increase in interest rates has boosted retail demand, which can now be served efficiently by routing orders to platforms and a wide range of available auto execution solutions. These trends have deeply impacted broker agency fixed income intermediation, and specifically the execution of the so-called retail size flow. The experience of Intesa São Paulo Market Hub, arguably one of the leading retail-sized fixed income execution platforms since its launch in 2008, thanks to its key role in the Italian market, and how we rapidly evolved our business over the past 24 months, tells an interesting story of these changes and how we respond to market trends and the needs of Italian and international clients. I don't think I want to read this whole thing out to you. Interesting. I think this was more a pop piece for that exchange. Is a 16 gigabyte RAM on local computer the same as 16? Yeah, sure. 16 gigabytes of RAM. So if it is not a local machine, if it's like a virtual machine, then the hardware is virtualized. There used to be kind of like issues with that sort of a thing, but as of late, the hypervisors have gotten really, really good, and it's not really a disadvantage. So you should, if you wanted, especially if you're running this for like electronic trading, you know, like tradingservers.com, or I forget the name of the website or whatever, totally fine. I would not be trying to manually trade through a server like that, though, because you will still have to deal with latency, because you're going to have the latency between you and the computer, and then from the computer to the market. It might not be a significant factor, but I'd rather not. Oh, what is this, Jeffrey Gunlock? It is absolutely the case the United States military should be able to pass an audit, and we've got to be on that pathway to get there. That pathway is obvious, Deputy Secretary. Transparency, yeah. I don't understand how you can come in and like, well, we didn't fill the audit, we're working on it, sort of a thing. It's like, okay. I think that fills would be better on a co-located server. Not necessarily. Not if you're clicking manually. I know that all of the people try and convince you that that's the case, but so look, no, okay, understand, no, listen, okay. If I'm making software, it is a lot easier for me to update that software on my systems and do everything on my systems than it is for me to distribute an executable that you install and you run it on your machine, and I have to deal with all of the different types of system configurations out there. And the trading demographic does tend to be a little bit older, so you're getting a lot of people that are like in their 50s and aren't the most technically savvy, and so on and so forth, right? And so it is to my advantage to convince everybody that my web-based or cloud-based platform will be superior, right? But you're giving up a lot of flexibility and customization from doing that, right? The web platforms tend not to be as customizable. They run in the web browser, so they're not quite as snappy. There's just all sorts of little problems with that, right? Now, getting NinjaTrader and installing it on a co-located server or Jigsaw, getting Jigsaw, installing it on a co-located server, and then trading it that way, it probably works, but you're paying a whole lot extra for not a whole lot of difference, right? Because there's still that latency involved between you and the co-located server, right? So you're not actually getting faster execution. And not only that, but getting a machine, a local machine that can handle the day trading is not hard. I mean, even an entry-level computer these days, even a sub $1,000 computer will handle day trading like a champ. Any 5,000 or 7,000 series CPU, AMD CPU will run like a dream. Good morning, Anastefa. You have a 64 gigabyte i9. That's pretty well. If you're doing it in the cloud, it's overkill. Like just understand that if you're just doing what I typically do every day on the stream, right, where we're watching the Jigsaw DOM and our charts and we're making decisions manually, way overkill, right? Now, when I'm doing machine learning, when I'm doing streaming on top of that and all of those other sorts of things, then the processing power really matters. But at that point, you really want like the graphics card processing, which, by the way, for graphics processing data centers, sort of a thing, is like $3 an hour. That adds up quick. 64 gigabytes. That's way overkill. I have 32. So the other day, I tried to download a very, very large data set. I downloaded tick resolution data from the ES for the last year into my Jigsaw, and it was like several tens of gigabytes, right? And NinjaTrader doesn't know to like cache it outside of using the system cache. So it used my RAM to store the download. Right? But even then, I didn't get 100% usage of my RAM. That's 32 gigs. $64 is really overkill. Do you believe in liquid cooling for PCs? Is it a drastic change? So In general, I would say it's not worth it. So here's the thing. They've got like these all-in-one coolers that are really convenient, but they don't work as well. So they don't really give you an advantage. They just kind of look cleaner on the CPU because it's kind of annoying to have a huge heat sink on your CPU, right? Especially if you have to change anything. Like my heat sink goes over the RAM, which is like crazy, right? But if you're really gonna go all out with liquid cooling, you might as well, make a full loop. But that's the kind of thing is like, okay, do you actually need the liquid cooling? Because unless you're gonna overclock it and all of this sort of stuff, air cooled is gonna be just fine. What the hell? Swipe right on your 1040EZ inside the Tax Heaven 3000 dating simulator. And it's like this anime dating simulator. What the fetch? Brooklyn-based art collective MSHCF released a provocative new game that prepares your 2022 taxes with software based on intimacy and Benyan horniness. Oh my God. Somebody wrote lewd tax preparation software. What the actual F? B9. What the heck ever. I enjoyed doing my taxes, although it's taking them a long time to get their return back to me, and I'm starting to get nervous because I double checked everything. The tax return was a lot more than I thought it was going to be, especially since that all the news had been saying, oh, your tax return's not going to be as much this year and everything. But it's the kits. It's kits is what does it for you, man. And this is what don't ever get involved with TurboTax. They're dangerous. Oh my gosh. Dude, look at how much rouge they're putting on her cheeks. Gosh. So I think this thing in anime is really kind of funny and interesting, to be honest with you. So, I've gotten bored of traditional streaming services over the last like 2 months. Like Netflix, oh my gosh. How did we go from it's funny how quickly it shifts, right? In 2020, during the pandemic, like the Tiger King era, it was like there was all sorts of great stuff on Netflix, and now it's just trash. There's nothing good on Netflix. It's all trash. And HBO Max was really good for a while, but then they came in and like gutted that company. So like most of the interesting stuff on HBO Max is gone too. I mean, there's some old shows. So I watched all of Rick and Morty. That was interesting. But well, yeah, it's hard garbage. But anime, man, those guys in Japan, like here's what I think it is I think that an artist in Japan takes their job more seriously. Like over here in the United States, especially when you get into Hollywood, it's all about getting attached to a certain project so that you have your name there, and then you can use that you can like basically fail up in Hollywood. And I don't think that they really care about the art really so much. And it's not even so much like they don't care about the art. It's they don't care about the societal impact that their art will have, right? So they're totally okay with shifting the art around and doing whatever they want to it to serve some sort of an agenda, right? Whereas I think in Japan, their whole idea of things is like you pick one thing and you get really, really good at it. And if you're going to be an artist, then you're going to choose to get really, really good at being an artist. And they put so much work into the storytelling and the characters and the overall meaning of the show and stuff like that. So I got a Crunchyroll subscription, and like we just watch anime, and like my wife would always complain about oh, watch anime, whatever, right? So it would just put on romantic animes and then she's into it, right? And there's some good stories in there, right? Okay. But like there's this thing though that like every anime has something that's a little icky, right? Which is to say some sort of a sexual situation that's usually a little bit embarrassing for the characters is usually how it turns out, right? And I think if these were shows that had like a studio audience behind them, they would be like, the studio audience would be going, woo, and like jeering and laughing and all of that sort of a thing, right? Okay. But there is also Eki that is really just like, man, they just put that in there for horny teenagers. Like they really just straight up did. So it's this weird kind of dichotomy in the Japanese culture where it's like everything's really traditional, but then Eki, and it just like randomly pops up. Like what the heck? And so now, yeah, there are sections of it that just go all out, and so now you get this thing, man. Dude, it was a little startling to see how HBO Max got gutted. Just wait until they start gutting Disney, because here's the thing. They had like this Star Wars celebration recently, and they came out and they said, oh, okay, so we're gonna do these 3. So they have a series that's going to be, or a movie, I don't recall what it was, about like the very first Jedi ever. And then there's going to be one about the post-Republic era that's basically going to be like Heir to the Empire as I understand it. And then there's going to be another one about, they're going to bring Rey back, and they're going to, I think that they want to do a series or a movie about Rey and her rebuilding the order, right? So all of the Star Wars fans are like pissed, okay? Because they want to see Luke rebuild the Jedi Order and do what he did in the books, and they're like, oh no, we can't let Luke do it, so we're gonna pass it off to somebody else, right? So it's gonna be either Rey or Ashoka, right? So can't let Luke do it. Again, they're all super pissed, right? Here's the thing. Like, they have announced so many, like, there was this whole set of stuff that they were going to be putting out last generation of Star Wars stuff, right? And the only stuff that made it through was Book of Boba Fett, Kenobi, and Mandalorian Season 3, essentially, right? And everything else got canceled. Walter is a fanboy. Everything else got canceled, right? And then there was, less than a month ago, the whole reworking of like the Disney leadership, right? That the old CEO came back and all of that sort of stuff. Remember that? And like the stock isn't doing very well. The stock is not doing very well over there at Disney. So what are the chances that these new series that they announced like 3 days ago or whatever it was actually get made? I don't know, man. I think that they're probably going to come in and they're going to gut Disney Plus too, right? Because they're making a lot of stuff over there that's kind of like, what are you doing? This is all stupid. The quality has just gone down. And like I said, it's I really don't think I really don't feel that the stories that I'm seeing made over in Western media like really have anything interesting to say. Whereas Japanese ones, they do. You think we're gonna have an update today? I don't know. This is a little bit more like reversion from the overnight move, but seems pretty dead right now. But there is a fairly consistent about 5,000 net contracts along in the treasury. Anyways, that kind of makes me think, so there's the kind of tangent to this is the whole Anheuser-Busch debacle, right? Basically, they're using a transgender influencer to promote their product, and a lot of people are really upset about this. I'm actually surprised that this is the one that everybody got uppity about, because that same influencer that they used was making Tampax commercials. Like, what the heck? I'm just not sure that is going to be effective advertising for you. And Anheuser-Busch has gotten hammered. Yeah, Dylan. I really like. I can't understand the logic. Like, the people think that this kind of marketing would improve the sales of their product. It seems like they do believe that. Like, it seems like Anheuser-Busch thinks that this will make them more inclusive and will help them reach a broader audience. I'm not convinced that's the case. Not convinced. And their stock has been, let's go look. How badly have they gotten hit? Anheuser-Busch, bud. Oof. Well, now that's interesting. Okay, so they only got hammered on Monday. Here, let's do it on a daily chart. Get rid of that nonsense. One day, and that was after a pretty big run up on the 28th. It's a pretty big, like, 1, 2, 3 day run. Do you think that there would be, I don't know. Do you know somebody that would be better? So here's something that I see happening that is completely separate from the whole woke diversity inclusion issue. Okay. But that I am aware of because I am an influencer, quote unquote. I really don't like that kind of a term, just because I am not the same kind of an influencer in the way that, like, the top influencers on like, a lot of these top influencers are like, I'm really good looking, and then because I'm good looking, you should buy my products. So, you should buy these things that I support, right? That's whereas, I'm more of a subject matter expert, right? And the whole idea with the stream is, I can teach you all of these things, but I can also kind of bring the edge and directly to you, because sitting here watching the live stream and kind of seeing the, it carried out practically is a really big help to people, right? Well, so we kind of went through an influencer bubble, I think. Like, it has come down to, like, you can charge people based on the number of subscribers that you get, and the reality is that companies don't always get their money's worth from that. So in the Instagram era, that totally worked, because the number of subscribers you had played a very large part into how many people saw it. In the TikTok era, that, like, almost doesn't mean a thing. Like there are some influencers that are like being boosted by the TikTok algorithm to some extent, right? But there are a lot of influencers out there that they can have tens of thousands of followers, and they'll post a video and their videos don't get any more views than mine do, right? And then on top of that, who knows if they actually like click on the link. Like, so if you're like outright supporting a product, how many people actually click through? And they're finding that on TikTok in particular, that not a lot of people are clicking through, right? But the problem is that is like the model. Like that's the model, right? So for what I do, totally makes sense to be like, you come in, make a sponsored video with me. I charge an amount based on the number of views that my videos are getting at that time, right? And for almost anybody that does sponsored videos with me, which we don't do very often, but when we do a sponsored video, like they do well. They do well because you only need a small handful of people. You know, you only need that to lead to a small handful of sales to make your money back, right? Because, I mean, these guys make serious money from what you guys do, right? But when you're going to, okay, I'm Anheuser-Busch and I want to do promotion, the only thing that they know to do is to go and find somebody, some influencer, some guy that's popular on social media and just pay them a ton for their appearance in it, right? On the theory that their audience is going to come in and do it, right? So like we're in a collapsed influencer bubble, and like the industry is still kind of going off of old things, and the large companies don't seem to have figured out how to make it work for them. So you see this with Disney too, right? Like that latest Mandalorian season 3 episode where they got like Jack Black and this other lady who apparently is very popular on social media. I had never heard of her before. Oh, we're looking at this stock because they are down really big because they had a transgender commercial and their fan base is unhappy about it. So people have been shorting the stock. So I'm looking at this going, okay. Is there actually like opportunities here for something? I don't know. The stock is up in the overnight. You know, I think a better one of this, it's kind of not transgender, but just this kind of like more woke based advertising. Well, I don't know. When Colin Kaepernick did his thing, that was like 2018, 2019, right? I think that was maybe this little dip right here. The stock is up from there. We'd have to compare it to another stock. It seems like it could be something that you could eventually turn into a good kind of trading strategy. But at the moment, just on my initial look, it seems like really, really high risk. Get woke, go broke is a lie. Well, yeah, because like what happens is it hurts you in the short run and then everybody forgets about it and your company continues to grow along the same trajectory that it was. That seems like that's what happens to me. I'm having a hard time thinking of anybody that went into it harder than Nike. But I don't know if conservative boycotts are really that significant to a company's bottom line. Mostly because they can't commit. Well, I don't know about that. I think that the number of people that, well, I don't even think it's that. I think that what leads to a company making money is a lot more disconnected. So this is what pisses me off about this issue. Okay. Like real talk here. Okay. Not that I'm saying it's bad to like include people and have diversity. Okay. I don't think that it's necessarily a good money making strategy. Okay. To go like full on woke politics, right? That can hurt you. It frustrates me that if it seems more harmful if you go full on conservative politics, right? Like if you go full on conservative politics on social media, you get ratioed and stuff, right? You get throttled. Okay. But at the corporate level, okay, they're spending all this time worrying about being inclusive to transgender people, for instance, right? Why aren't they spending more time, considering what the impact of their company policies are on average Americans, right? It's like you can destroy local businesses and basically get away with like outright practical slavery with some of your employees and stuff, and just be generally absolutely destroying the middle class of this country. But if you're transgender inclusive, then you get the we're a morally good company check mark so that more people will invest in us. That is such BS, man. I think that we should be more concerned with the structural the structures in our current economic system that disadvantage the average person. I think we should be more concerned with that, right? And I really kind of feel like that a lot of this these other political issues are just a distraction to prevent people from going after the things that would actually make a difference to everyday people. You still never found a way to get NinjaTrader demo access? It's in there somewhere, man. I can't. I have trouble logging in, but they're gonna make it an easy spot to get to. And especially if you're doing demo access on their web platform, it should be really easy to get started on their web platform. To be honest, though, if I'm starting out today, I don't know if NinjaTrader is the place. I don't really feel like that there's a platform that's really the best anymore, but well, the real question is, what was Anastafi using before? Because he wasn't using NinjaTrader as far as I can tell. What do you think about the BRICS currency and the dollar? Okay, sure. Let's talk about that. I can rant about that one too. Okay, so from a practical perspective, here's the thing that you need to understand. We are moving into a world where trade is done in a wider variety of currency, because the smaller economies of the world are becoming more important. It used to be the case that the United States was like the only economy that mattered. Okay, that's not the case anymore. Europe has become a very developed market as a whole, and then you've got India, China, Brazil, right? These are all really, really huge markets, and they each have their own currency, and so yeah, you're gonna have to transact in that currency to some degree. Okay, but the dollar is still a reserve currency, right? You got to remember, like, what is a reserve currency? Okay, the reserve currency is the currency that you turn to when things go bad, right? If there is a war or there is a recession, things aren't going, you need to protect your money. People go to the reserve currency. People also hold that currency in reserve in case of emergencies. Okay, the US dollar is still the reserve currency, and the talking heads out there that are saying that the dollar is losing its supremacy as a reserve currency are being stupid, to be frank with you, because nobody's gonna go and turn to China when things go rough. Okay, right? If things go south with world geopolitics or the economy, China's gonna be the last place that I put my money. I mean, look at the way that China went during COVID, because initially it was kind of like, oh look, they totally like killed this thing, right? Maybe remember when we were talking about this early on, for those of you longer viewers, when we were saying, oh, like, why would China create this virus? It's just hurting them. And then it came over to the United States and it was like, oh man, it's hurting the United States way more than it is China. But then China went on like full lock when the virus eventually did actually come to China. It was like full lockdown over there, and it just absolutely decimated their economy, right? And they shut everything down. I really don't understand how you can be invested in China for the long haul and feel confident about your money being safe, you know? I'm not saying that I wouldn't invest in Chinese companies. It's just, you know, if I'm in them, I'm probably watching them really carefully with, you know, ready to jump out at a moment's notice if I have to. You know what I mean? When there is a decline in the economy, for instance, the most recent kind of decline that we had off of the 4,300 or whatever before we had, when we were having a banking crisis, what happened? People moved to dollars. Okay. When you have a major recession and the dollar falls too, then be concerned. Okay. Then that means that the dollar is losing its reserve status. But no, I do not think that this kind of this narrative really makes much sense. And I would be looking for opportunities to catch those guys on short squeezes. Okay. Like, we had a pretty decent move up in the dollar last week, and I think it was largely all of those guys, because they've gotten really noisy lately, right? So the dollar shorts are out there. The dollar shorts are out there looking to do their work, right? They got slaughtered last week, right? So I would be on the lookout for those kinds of opportunities, because the people making those trades are making it from some sort of a cynical worldview that I do not believe is really very reflective of reality. No, but I'm pretty sure that if you sign in with NinjaTrader and then you go into your account settings, that there should be a place where you can sign up for demo data. I'm sure that's still a thing somewhere. And you can still get the demo data from the data providers themselves, like Rhythmic and CQG, right? But to that point, if you are still trading on demo, I would encourage you to pull $400 together and start an account and just trade that account in sim, instead of having to try, because I did that for a long time, Stefa, and they started banning my IP. Right? They don't let you do that for very long. They don't let you do that for very long. So if you've already done a free NinjaTrader demo, I would just say, okay, if NinjaTrader is the one, then I think that the minimum account size for NinjaTrader is $400, and just start an account with NinjaTrader brokerage, and then you don't have to worry about that shit anymore. Thanks, man. That clears all the crap out there in social media. Everybody's got a... I find it very difficult to understand why certain narratives do so well in the social media age and other narratives don't, right? Like, I would think that the ideas of freedom and economic freedom and self-empowerment would do well on social media, and I'm not so sure they do. I would have thought that the ideas of like doing things in a scientifically backed manner and being experts on things would be a thing that would be effective on social media, and it's not. What other choices do you have, though? For futures, I don't know if you're. I don't know. This is an odd conundrum that we have in the futures trading space, right? Is that the futures trading, you can get involved in day trading for the lowest, right? Because if you really want to day trade stocks, you need to have like over 10K, right? But it's really, really hard, and you're not likely to get a whole lot of it out of it unless you already have a pretty big wad to begin with, just because the risk is so high, right? Like the minimum, the table minimum is higher than the account minimums, essentially, right? You heard of the availability cascades idea about why? No, I've not heard about that. Let me try and search that term. I do not trade the currency markets, but I keep very, very close eye on what is going on in the major currencies, particularly the US dollar, the euro, and Japanese yen are the ones that are most pertinent to my trading. Is that just like if something gets popular, then it's more okay? Availability cascade is a term that describes the cyclical self-reinforcing nature of the development of certain collective beliefs. In other words, it refers to the case when a widespread belief takes shape because other people in one's network have been exposed to the same idea. Right, but how come if I go and I start an idea, right? So if the idea that I start is financial markets are fundamentally informationally inefficient, and there are ways to take advantage of it, and the orders are what moves markets. Technical analysis isn't a very effective way of predicting orders. How come that idea doesn't, you guys all watch it, you go and you tell other people, how come that idea doesn't catch on? It's because you guys aren't sharing it. That's what you're keeping it all to yourself. You think, well, I'm doing pretty good from watching this Seth guy. I'm just going to keep it to myself. So I didn't show you guys this. Oh my gosh. I have pictures, so I'm going to show you guys through the pictures. Okay. Let me pull it up here. Hold on. Okay, so in price action has been a popular strategy in the day trading space for quite some time. Okay, but in the post 2020 market, like that was the popular thing going into 2020, and I mean it kind of shifts, but price action was really having its day in like 2019. And so when everybody came into the market in 2020, the majority of those people that came into day trading, that was the strategy that they started to try and use. And in particular, there's one influencer who will remain unnamed, but he took the price action kind of principles and kind of remarketed it. He kind of refreshed it. He calls it smart money concepts. And it's basically price action. Okay. But this is what the majority of these people were trading, and there's specific setups that he particularly likes. So this is one setup that is very, very popular among the smart money concepts people. And the trade very specifically, I will tell you very specifically, is you have a break of the high. So if you have a break of the high, so here's our high, it goes like this and then it breaks, okay? I'm going to look at this pivot here before, and I'm going to look for a break of that pivot. So if we come back down and we break that pivot, that's a break of the structure, and we can say, okay, it has reversed and I now want to take reversals. So somewhere in here, you may get what they call a fair value gap. So like this bar right here on my chart is a fair value gap, because the difference between the high of the bar before it and the low, or the high of the bar after it and the low of the bar before it, there's like this huge gap between them, right? This moved really far, okay? So they call it a fair value gap, okay? So they're going to say, here's the fair value gap. I'm going to wait for price to come back to it, and that's where I'm going to take the short, okay? That's the strategy. Well, if you, this is, I backtested it, okay? So you can see here, before 2020, strategy didn't work that well, did it? Right? And then all of a sudden, kind of starting in 2019, started to do okay. And then during the COVID boom, like, you know, and during the COVID recovery, it did amazing. Okay. So I think that what's going on there is because all of a sudden you had all of these retail traders trading that, it started to be self-reinforcing to some extent, right? That lasted about 9 months. And then since then, do I not have it? Let me shift this over. Yeah. Now, over the last year, the strategy has done absolutely dismal. Isn't that interesting? Isn't that interesting? So when an idea becomes kind of popular in the market, it can do well for a while, but then the market catches on to it and starts taking advantage of it, and it gets crushed. Gets absolutely crushed. Now, what we teach is a little bit different, because I'm not teaching a strategy per se, right? I'm teaching you principles about the market, things that you can use as a guide for what kind of strategies you might want to gravitate towards, right? Maybe you just start a combine. I don't know. Like, if you just want to trade sim though, like the thing is you just do like 2 or 3 combines and you already have enough that you could have just started an account, right? So I know some people, there was this one guy, I think we watched that the other day on Reddit, where they had lost tens of thousands on combines. Anyways, oh, and so here's the other thing is, yeah, we're talking about influencer who will remain unnamed, and his name is not on the picture, but you can see here that they started doing well in January of 2022. So when that channel took off, that's when the strategy started performing poorly. Isn't that funny? So we've been saying this whole time, that it's like, you got to be, the problem with a lot of these technical strategies is that if it becomes popular, you remove all of the edge from it, and then it doesn't have an edge anymore. And they'll always say, well, that's not true, because if everybody's trading it, then it's self-reinforcing and it catches the trend or whatever, and so it actually helps you. And it looks like at the smallest levels, there's some truth to that, but you very quickly get to a point where you're so large that the market makers come after you. And that's why those kinds of strategies don't work very well, right? So that one in particular, like, there are now like other YouTube channels using his name and going viral because they're using the name. So like the YouTube algorithm picks it up and knows that these people watch it and pushes it. Wild, right? explain to me, why is that channel the one that goes? Because the guy is a total narcissist. Like, seriously. This crazy narcissist. Why does he blow up? I don't understand. Because look, I can understand why Seth doesn't blow up, because there are certain things about Seth that might grate people the wrong way. Seth has attention problems, and some of the ideas that you're going to that are going to help you become successful. Part of the reason that there's still edge in them is because the general public doesn't want to believe them, right? They're unpopular things, right? But there are other influencers out there in the particularly in the future space that are not even a fraction of that. How come they don't do well? What's with that? Was moving towards so here's the other thing is that now this is one. I'm ADHD, okay? I know I bring it up a lot, but it matters a lot to the psychology of these things, right? And now, because I am on ADHD medication 24/7, it kind of suppresses the limbic system a little bit. So I trend more towards logical thinking than a normal person should, because of the medications that I'm on. Okay. So to me, when narcissists come around, because we had early on in this channel, we started getting attacked by what I would call a narcissist. And it was traumatizing, to be honest with you. I mean, I never said anything about it. We never made videos about it. We talked about it on stream, I guess, but like, we don't want to use the person's name. Because we don't want people going in like, you know, the what I found is that the negative attention doesn't hurt them, right? Like the freaking Warrior Trading guys got hit by the FEC, right? Their channel's still going strong. Like, the people it's still out there on YouTube. People still find it, and the people that are watching it just don't know. It doesn't affect them. It doesn't affect their popularity at all, right? But so when these narcissists come along, it's immediate to me. It's like, oh no, hell no. I know exactly what's going on, right? And they use all of these kinds of logical fallacies that people. So that's the first thing is I know, like, what they're saying is not, it contradicts logic, right? And then it's all about them. And to me, it's so blatantly obvious. And I have a hard time understanding why people get attracted to that. Like, because if you go and watch this guy's streams, it's just like an hour of him yapping about himself, and then like 5 seconds to explain the chart pattern, and then it doesn't even really make sense how he's supposed to be using it or anything, right? But that YouTube channel took off, man. It took off. I think that for him, they market really hard. They market really, really hard. So I think that that's a big part of why that goes off. I don't know. Oh, we ranted about. You missed. Oh man, Lucas, you missed it. You gotta see. Oh, I did a back test of a strategy that is very popular among the price action traders and is promoted specifically by a popular YouTube trader. And I showed how it did well in the post-pandemic era. But once this influencer became successful, the strategy stopped performing. So that's what we were talking about. It's a case study of how trying to follow a strategy. So I think the thing that's different with me is I'm not promoting a specific strategy. Market seems unresponsive to the Dalai Lama tongue kissing that guy. I read the headline and like the description of that, and I noped out of that one. Nope. By the way, we should talk about the treasury market here. I'm not seeing a whole lot of strong volume in the 10-year, but in the 5-year, there's a pretty steady sell-off going on here. So I'm not 100% sure what's going on there in the market. It still looks quiet to me, though. And I'm not too sure if the opportunities for us are really very good until after CPI tomorrow. I'm grateful to get to watch you every day. The way you talk is like a journal, like news. Do I really talk that way? Well, I guess that's good. I don't know though. I'm not really very okay. So there's this influencer on TikTok. So I think you say her name Kyla. Kyla Scan, and she has really become the most popular financial news influencer on TikTok. And you know what? She totally deserves it. That's a person that she's doing all of the things right. She understands what she's talking about. Okay. And something that really impresses her, impresses me about her. Something that really impresses me about her is that, you know, other content creators and commenters will say things about the economy that are just kind of silly nonsense. For instance, this rant that I was going on earlier about, you know, what is a reserve currency, for instance, right? She made a video about that yesterday. Okay. Kyla's like Kyla. Kyla Scan. She's on TikTok. She also makes content for Bloomberg. So that's how well she did, right? When I see, like, I'm really impressed that she can come in and be like, well, okay, so here's what we actually know, and she goes through it and she explains it in a way that will be interesting to the average person. I think part of my problem is that I'm not necessarily targeting the average person. I'm like way too focused on you guys, like the people that would be actively trading in on the stream and want to know what's going on and stuff like that, right? Okay, but you know, she explains these things to the average person, and it's really good. And I'm sitting over here like, why are people so stupid? How can you possibly think that you know absolutely nothing? You shouldn't be yapping about this stuff if you're that stupid, blah blah blah, right? She's totally calm about it. I just can't do it. I see so much stuff on TikTok that just like, especially, man, I'm telling you, the freaking TikTok algorithm specifically pushes communist propaganda. 100% it does. The Chinese are trying to push it. And the people, like the influencers that push these ideas are dumber than dirt, man. Some of the dumbest arguments I've ever seen. It's literally like some high school kid that's never like read or studied anything about this, just like heard what communism is and then started coming up with their own arguments and incorporating maybe other stuff that they had read on the communist subreddit or whatever. And that's the influencer, right? So then when you get these other guys like from the libertarian side, like online, that's like a Federation for or Financial Education or something like that, they just eviscerate these communists. it's quite funny to watch, right? And I've come across them too. There was this one lady that was kind of like pseudo-communist, and they were yapping about inflation, right? And oh man, they came after me, and it was so like for a week, all of the comments were like, "Whoa, why are you so bald?" Like, is this really the average person? Because if this is the caliber of people that I have to deal with to be popular, I just don't want to be popular. And here we are. So I am not as in control of the emotions as it might seem sometimes. Why are you so? Because I shave it. I'm actually not as bald as other people. I mean, it's like to about here. I'm back to about here. So it's not as bad. Like, I'm still to the point that, like, if I let my hair grow out and I like really curated it, I could, you know, kind of get away with pretending that I still had hair. But I found that I looked better and I liked being bald. I just straight up preferred being bald. You know, because if you have hair, then you have to go and get a haircut and crap. You should Tim Pool it, and why? Because I don't. So here's another thing that has come across my brain from time to time is like, okay, well, so it seems to me that the average person really takes notice of possible signaling behavior of like financial success, for instance, right? You gotta be good looking and you're dressed nicely and like people treat you differently, right? Okay. That's not Tim Pool though. Like Tim Pool looks like a hobo to me, right? But he still does well. So that kind of makes me think, well, okay, that maybe is not what matters. Because the argument is, Seth, you should just wear a shirt and a tie every day and make your videos that way, and then people would take you more seriously. But I kind of feel like it would be less genuine. I don't know. There's a point with being a YouTuber that your audience just kind of, well, that's true too. That's true too. It is. The thing though is I think that there's more to it than that. I think that to go viral, to become a really large creator, there are certain things you have to be doing that I am not necessarily doing, right? Like for our YouTube channel to really, well, actually, maybe I'm wrong on that one too. Because I tell you what, the ICT videos are boring AF. Holy crap. I just don't understand how anybody can stand watching that crap. You know, like who is the other, the top trading guy that's been on YouTube forever? I can't remember. He was the one that he would like trade a bunch of different sim accounts, and then whichever one did well that day, that he would turn that into a video and make it all dramatic and stuff, right? And he's still out there. That one I understand because it's entertaining, right? So on my perspective, that's kind of like, okay, so there's like all of the like hardcore information that we got to get out, and then we have to go back to like making more entertaining videos if we ever want to become like huge, right? But I don't want to become huge. Like, I think that there would be problems if we were like a 200,000 subscriber channel. I think I would have to, yeah. Day Trader Paradise? No, that's not him. So Day Trader Paradise as actually, so what I think he's doing, I think is very risky, but it's a lot more legit than most of the stuff that's out there. How did you code a backtest for fair value gaps? Did you decide the magnitude of the gap to qualify as one? Yes, I did. So if there is any gap in there at all, it can qualify as a fair value gap. And then there's a setting in there to say that the gap has to be a certain size. And then when I was backtesting the strategy, I went in and said, okay, how big of a gap does it need to be? Right. But what I found with the fair value gap thing, so here's the funny thing about that strategy that I backtested, by the way. The biggest problem with the strategy is that the setup is so specific that it doesn't actually happen very often. Or rather, it's something that is like maybe every other day or every third day it happens. So by making the trade even more rare, by requiring a larger gap, it just means less trades and therefore you make less. So the threshold on that backtest is actually quite low, because that's just, I backtested all of the different possibilities. That's what worked best. So I made a LinkedIn post yesterday. I doubt that anybody really saw it or cared. Let's come in and look. I would really hope that I was kind of hoping that like some of the people, well, some people liked it, but I wish that some of like the serious scholastic researchers would see that and be like, oh yeah, let's turn this into like a real study. Because I think that is like the first clear evidence I've seen of social media impacting a strategy and it becoming unprofitable as a result. Yeah, I don't know. It could just be that it's only a matter of time, and then the channel as well. I don't think about that so much anymore, as much as I do trying to understand why certain content goes viral and others doesn't. Because what bothers me is not that Seth's channel is not more successful, because I think that we have the amount of success to do what we want to do, at least right now. You know, the next step up would be like more machine learning stuff, and maybe being able to start a hedge fund out of it or something like that. I think that's where we would go, is if we became a successful YouTuber, we'd use it as a starting point to create a hedge fund. But I'm more concerned about that some of the content that I see that goes viral seems to be very detrimental to society. Right? That's more what I'm concerned about. It's a certainty factor. I think some of these guys are confident and convince people they legit have an edge. Maybe. Do I seem not confident? I don't know. I put a lot of qualifiers on what I say, right? I'm very, very specific about what I say. Because again, I'm a little bit more logical than an average person should be. I would probably be more likable and more popular if I wasn't on my medication. But I wouldn't trade as well, so. Well, the treasuries have been kind of sitting here at the lows. This is not the same kind of a move that we had yesterday. I see the Japanese yen starting to fall out a little bit, but this seems to be driven more by the 5-year. This must be more concerns about inflation, is my best guess for the flow that we've seen today, because it really is on the short side of the curve. Which is why I'm a little bit more careful about taking a position, right? Like if we were moving up, I would maybe be, if we were moving up and flattening, I would maybe be a little bit more, oh yeah, we got to get in on this. But if the spread is working against me, then if I got in here at like 3.425, I might only get like $5. It's an issue too, because people don't want to think about the research. They want a visual yeah. So have you seen, this has been a story this week, I guess. Like I kind of see it going out, and I'm going to bet you that a month from now, this is going to be more talked about than it is. So for decades and decades and decades, IQ scores in Western nations went up and up and up and up and up. And over the past 10 years, they have actually declined. But it is not across the board. So IQs for spatial reasoning, so like your ability to take an object and rotate it around in your head, that has continued to go up. But the other parts of the IQ score have gone down, right? and it does seem to me that there has been a change in attitude. Like when I was in school, I was often frustrated by the attitude of the other kids in school. I didn't feel like this when I got to the university level, but especially at high school, I felt like the majority of the kids were complete idiots and were wasting their time. You know, that you had opportunity, like your best opportunity to learn things and develop your mind, and they were just hated being in school and wanted to screw off as much as possible, you know? And I think that what happened was those people grew up and had kids and kind of instilled that in their kids too. And so it is the case, like, people don't want to read serious material anymore, right? We're used to reading pop culture stuff on the internet, and so that's all we're interested in reading, and you can't get people to read a serious scholarly study about something. It's too hard for them. They don't want to do it, right? And so then that would imply that people would be more interested in like the visual stuff. Yeah. Well, we could emphasize that a little bit more, because what some of the things that have done the best for me on YouTube shorts have just been showing the DOM going, right? Damn stupid world and everybody not knowing calculus and trigonometry. Yeah. like okay, here's what I think is funny about that comment is that to the average person, calculus is like really sophisticated math, and to me, calculus is like everybody should know calculus. It frustrates me that not everybody knows calculus, because that's the level that I feel like people should be at. Like astrophysics is like what way beyond that, but like basic calculus, I feel like that everybody in high school should get through to that point. The fact that we don't in America is a problem, I think. Is that a sign of my being out of touch? I guess out of touch because I know calculus. You know what? It wouldn't bother me so much. Like, I understand your expectations being too high, I guess. I understand that I am an unusual person in many respects, and I don't expect everybody to have the same interests as me, in the same depth of knowledge on certain niche subjects as myself, okay? But if you don't know the subject, then shut the fuck up. That's what I hate, man. What I hate is everybody wants to be stupid until it comes down to what's actually going on with your money and in the political structure and everything. And now all of a sudden, everybody wants to have their say, even though they've done absolutely no study on the subject whatsoever. Okay. So like when you have French protesters going in and infiltrating, breaking into BlackRock headquarters in France, this is stupid. It's dumb. They're an index fund, guys. Like, come on. What do people think they're accomplishing? It's just silly that has become like one of the rallying points of that movement. Says to me that these people don't know fuck all what they're talking about. You're not as unusual as you think you're pretty, no, but I'm not. Like, I hate Reddit, man. Redditors hate me. I am almost always against the grain on Reddit. No, I do spend a reasonable amount of time on Reddit, but I do not share the beliefs that the typical Redditor does, right? Part of what keeps me going back to Reddit is that I just can't help but argue with them. It was the whole time, like back in the Obama years, it was always like they're all fawning over Obama, and we're like, well, okay, here's like what the actual policy is doing and everything, and here's everything that they're not telling you about it, right? Oh, downvote, facts. Gotta downvote them. No, see, that's wrong. Being right is not important to me. That would imply that, to me, how people perceive me in my reputation, that I need to try to appear that I'm correct, even if I am not correct, in an attempt to save face or to protect my reputation. That is not true. I do not have to be right. I have to be correct, which is to say my understanding of the subject needs to be in line with what the reality is, right? And if I believe something that's not in line with the reality, then I am very interested in being able to understand why that is and prove that one side or the other is true or not true, right? I am concerned with actual factual information being used in making our decisions, right? Yeah, well, I do browbeat people for sure, because when there's things that like I know, there are certain attitudes online that like we have a very good evidence to say is complete nonsense, and it drives me crazy. It drives me crazy that so many people out there are working from such a flawed framework, because it means that a lot of these problems that we have can't be solved. And the further along it gets, the worse, the more frustrated about it I become. That last little dip was quite a bit more, quite a bit more volume in the 10-year. What did we say though? We were 2.5, so we're only 10 still from where I thought maybe we could do something. Big brain. Well, but that's the whole funny thing, is that if you really understand the market, then you understand how difficult it is to actually come in and make money from doing this, right? like look, here's how I should really be presenting it. Okay, I have 5 kids, I own my house, I have a room here in my house, a nice room, by the way, that is literally just for streaming this. Okay, and I make YouTube videos. It's a lot of work. I am so successful that I can waste all of that on something that really doesn't have that much of a reward to it. Well, it doesn't really not have that much of a reward, but it's just very, very difficult. And what you get back out of it is usually not equal to what you put into it, right? That's how well I've done in life, that I can waste that much. Okay. Your channel description should be just don't drink. Well, the whole thing is so if you are out there and you're trying to make as much money as possible from a YouTube channel and as much money from being a trading influencer as possible, then your incentive is to try and get as many people to trade as possible, right? So then you have to put on this face that yes, you can totally become rich from day trading. Just come and follow me. You should all totally do it, right? That's not my approach, because I know the actual reality. The reality here is it's not that you can't make money. It's that it's a very, very difficult. It takes a certain type of person, and that the upside to it is limited if as a retail trader, unless you already have a ton of money, right? So I don't need to convince people to trade, right? Because the reality is the average person shouldn't trade. The average person shouldn't. I'm only interested in the person that has already decided to dedicate their life to trading. That should be a very, very small portion of people. Those people out there that do not find it intrinsically and internally rewarding, right? They're looking for it. They're getting into day trading for the external reward, which is the amount of money. I want those people to go away because they're never going to make it. And I know that, right? Might matter to potential viewers, is true. But this is where I've come back to the whole thing that's like, I don't think I really want the stream to be that much more successful than it already is. To be honest with you, right? No, I don't think that I understand why somebody would not be interested in listening to me. I don't understand why they're interested in listening to some of these other people. I don't understand why somebody would want to come online and listen to a narcissist for hours a day. That makes no sense to me. And yet, I see it over and over and over again. Like, narcissists do really well on social media. I think you're being... No, I don't... So I'm telling you straight up. If the YouTube channel regularly had more than 100, 200 viewers a day, in terms of like viewers active at a time, if we were regularly hitting 100, 200 viewers, I would have to change the stream. And I would probably turn this stream into a subscribers only stream. So there's a limit to how well it can do. The YouTube channel itself is a different thing, right? Because on the YouTube channel, I can edit everything. We can choose to talk about the videos that will have good clickable thumbnails and all of that sort of a thing, right? But here on the stream, what am I primarily interested in about? Doing as well as we can with the trading. If somebody's going to come in and they're going to say something that we know is objectively false and that I believe is harmful to the trading, then yeah, I'm going to browbeat people, because the reality is I just don't want that type of person here, right? I don't want people in the stream that are going to make our performance as a group worse, right? I want people that are going to help us be more successful, right? And so when I see people come in and they want to talk about like price action, that to me is like, that is a threat to our success as a group in the markets, that we're not going to trade as well because you're trading off of flawed ideas. So I try and scare those people away. Always been that way. That's been from the very, very beginning. Always been that way. Well, I think the YouTube, the reason that ICT gets 15,000 people is because the algorithm sends them to them, right? I have had streams where that many people were here. And I guess it was kind of fun, right? But it didn't help my trading, right? Now somebody asked me about why we're not taking on this short. I think I'm still kind of waiting for CPI tomorrow. When we were seeing like the initial downside, it seemed kind of iffy. Even now, so we're getting this pullback. the 10-year volume is kind of equal. So I'm not 100% sure what's leading that flow. It wasn't necessarily expected for me. It doesn't interest me that much. But yeah, no, I think the highest was actually like 9,000. The highest was actually 9,000. Where was it? Would you agree that you're this fun? No. Yeah, I think the first stream was like 8,000. That one was kind of weird to me because like that was where I realized how fickle of a thing it was, because I came in, I took a little bit of a break, and then I came back and there was like a lot of people watching, and then I started talking, and that's when it really took off. Once there was somebody talking, then it like people stayed longer, and like the stream really like got big. And then I had to take another break, and when I came back, like everybody was gone. I was like, oh, huh. Yeah. Well, it wasn't just that. That one like went viral. Like this is where it gets kind of interesting, I think, is that it was all external. Like people were sharing the stream in like their Telegram channels and stuff like that. And so as far as I understand, it wasn't actually YouTube sending the people to me. Back then, YouTube did not direct people to streams. I don't think that streams even really showed up, right? Now, when we had the GameStop thing, right? And I had that in the title, then YouTube was sending people to me, right? And two things kind of happened. Was number one, people only wanted to be in the cult. So because I wasn't in on the cult, you know, a lot of those people left because of that. You know, we went back to what we normally do, which is trading treasuries, and that wasn't interesting to them, right? So this is like the perfect example of where it's like, what is the actual goal here, right? The actual goal is to get better at trading and to understanding the markets, right? That's the primary goal. So if the number of viewers comes in and it's a detriment to our overall trading, then that's harming our goals, right? And from those experiences, it seems to me that once you get to about 100 people, it starts to become a distraction and it hurts us or hurts our trading. So we would have to change things to limit the number of people that came in. Yes. Now the YouTube channel as a whole, that's a different thing, right? The better that the YouTube videos do, the better that the individual YouTube videos do, the better it is overall, because we can take those resources and use that into improving our trading even more. And it helps the average person because you know, the average person doesn't understand that the market's not efficient, right? So they're kind of trading with these ideas that are fundamentally flawed. And if retail traders, when retail traders understand that and then work together, then you can be a force, right? If you want to be algo friendly, put ES in the title. Yeah, totally would be. Well, so we should care more about individual videos, right? VODs. So I don't really want to change the stream in that respect. I mean, if I can get a better thumbnail, if I can change the title a little bit to have, but I don't want to bring in ES traders necessarily, right? Although the channel did have more viewers when we were primarily trading ES. Yeah. What videos would you make? Well, so I want to make a video that is like the problem with volume profile. I think that this video and some of the stuff that we might share, which by the way, did you get a chance to run that indicator? I did give you the indicator, right? we can get that data, I think it would be a big deal. Because I'm going to make a video that if you want to trade volume profile or your trading volume profile, you're going to want to watch. And you might continue to trade volume profile after watching the video. But there's going to be information in there that you're not going to get anywhere else that's going to be valuable to you, right? So that to me is like, okay, making a video that brings the most value to people, right? Well, what I found is that that's not what necessarily gets a YouTube video the most views. I mean, it helps, it certainly helps, but that's like not exactly the largest factor. The largest factor is one, hitting on a subject that has a large amount of interest out there, and there's not that many people interested in market profile actually, and having a thumbnail that catches the eye and creates curiosity and convinces people to click on it, and then having a format in your content that keeps it interesting so that people watch more of the video, right? So I'm often just struggling to get a video out, so they might not be as entertaining or as attention holding as they should be, right? But I'm kind of more like, well, I want to get this information out to you guys first, right? Once I've done that, and I don't really remember, what do we got? The problem with volume profile is the one that I'm working on. There was another one that I was writing though. What was it? I'm building a new rig next week that will have significantly more. Well, okay. Plan videos. Maybe we should make a Ninja Trader basics. We might get more jigsaw content in here. But then it probably does move to like, how much money do you need to day trade? Because those are things that like I know people are searching for and stuff, right? So it's kind of like, hey, you get the real content out and then you go and you try and make the content that will be popular is kind of my take. So we'll see how that works. Okay, so your thoughts about trading supply and demand. So first of all, I really hate the term supply and demand. Okay, so supply and demand is more of a macroeconomic sort of a thing, right? So really what we're talking about is trading support and resistance, right? And here's what I will say about support and resistance. An area with previous support or resistance is not really a very effective indication of where support and resistance actually is. Finding something that has greater than 55% chance of like predicting that it's going to turn around there is like, if you have something that actually does that and you can prove it statistically, then we should start a fund, right? Most of the methods that people are using in support and resistance to do that kind of trading aren't really very effective, right? And I'm the way that I trade is kind of looking for breaks of that, right? Where I'm most interested in trading is when I have reason to believe that a flow is going to be coming through, that there are people that are going to be selling, and that they're going to bust through that resistance. So if I know, so I don't know why they're selling today. Maybe it's more Japanese yen stuff. Let's just assume that today is like yesterday and that it's Japanese yen. And that I knew ahead of time that this was coming, right? Then when I see the initial move up that we had after the open, right? That they bought this resistance area around 16, I'm happy about it, right? Because I can sell and those people are just going to add fuel to the fire when we bust through them, right? So I tend to be more trading the breakouts or before the breakouts, and I would only be looking at support and resistance sort of a thing when I don't expect the market to be doing anything. And I don't like playing that game because it doesn't matter what you do, the market maker will screw you over, right? Because they're reacting to the decisions that the group makes as a whole, and as the group kind of evolves, they just change what they do. It's a losing game. Supply and demand as a concept is more interesting when applied to supply of limit orders and demand. Well, but so I don't, so even if you were kind of trying to use that kind of a framework, I don't think that it ends up being a very effective terms, right? Because there are 4 forces essentially. Well, actually there's 6 forces, right? There's limit orders adding, there's market orders, and there's limit orders canceling. So you know, you could call supply limit orders and demand market orders, and then you could say sell side supply. For instance, in this area there has been a lot of absorption, so sell side supply over here, or sorry, buy side supply down in this area has been somewhat strong, but the demand is still pushed through them, right? The sell side demand is pushed through them. So, to understand a little bit more about why I trade that way, go and watch. I have a playlist on my channel page about order flow, and so watch that whole playlist. But then there's some videos at the end about the inelastic market hypothesis and proven market behaviors that explain why we take that approach, essentially. When a large player is coming in and buying or selling a large amount of something, then that tends to move the market. And when that's not happening, the market maker is in charge. That market action tends to be random and is not really very effective for making money. In my experience. So I'm just looking here through headlines, seeing if immediate yield curve change not coming, but Japanese weakness unlikely to prove sustainable, says MUFG. Well, the decline that we've seen here has been correlated with the Japanese yen, though, so I think we'd have to say that this is more Japanese yen selling, right? Which we can catch a correlation, but I'm a lot less likely to be able to catch a good trade on that one, right? That is not one that I'm good at catching. So, going back to our earlier conversation, here's the other thing that bothers me. It's not that Seth's YouTube channel isn't more popular than it should be, right? We already kind of discussed what I would like for the channel. I don't necessarily want the stream to be too popular. I want the YouTube videos to do better. Probably in order for that to happen, I have to make better videos, okay? But what bothers me is we have good information about the markets, and that doesn't seem to propagate, right? Like, it would seem to me that somebody that is better with people, I guess, would come along and go, oh, okay, like this actually is good stuff. I'm gonna go and start my own thing with it, and then they would blow up and be popular, and the ideas would, and it would help the retail traders out. But that's not what happens, right? So it seems to me that there is something intrinsic to the ideas that the public, or at least the public that we have now, like, doesn't like. It says, you know, it says something about them or their society that they don't want to believe, is what I think it is. It's like, so if you're a libertarian, right, and you come in and you hear Seth say, oh, well, market isn't very informationally efficient. I mean, that contradicts everything that libertarians believe, because libertarians believe that the market is perfect at everything, and that's why we should trust it, right? People don't go into trading just to learn about markets. Well, they should. Yeah, so there's two things on there. I have two arguments about that, okay? You're right, I might never change that. That might be the case. Number one, if you are not internally motivated, you're not going to stay with it. Right? I feel like that we have an obligation to tell people that at the very beginning, right? So, you know, they've done these studies where, like, they had these kids, and the kids would color, and these were like 3-year-olds. So little kids love to color, right? They find that internally rewarding. So then the researchers would start rewarding them with paying them. I think in this case they were using money, but I could be wrong. They started rewarding the kids for every painting that they made, and the kids stopped doing it. So when they replaced the internal motivation with an external motivation, the kids lost interest and stopped doing it. Right? That is trading, man. I tell you what, you get into trading, and if you are internally rewarded from the market itself, that the market is very interesting to you, then you are the type of person that is going to stick around long enough to get good enough with this to have some worthwhile success with it, right? But what happens to people very often is they start to have some success, right? And then they get killed. Right? They have a period of success, and then market volatility comes along and wipes them out. And so they were starting to get that external reward, and the external reward disappears, and then they stop trading. And you can see it. If you like go to the Discord, man, I bet you that if we could graph like number of messages per month or per week on Discord and put it up against the stock chart, you would see correlation with them, right? The people that stick around are internally rewarded, right? And I think it's really important that we tell people that at the very beginning, because I don't think that most people that get into this realize that this is something where it's like you're going to have to like dedicate your life to it for 5 years, and even then it's probably not going to be something that you can just completely make your living off of unless you go and work for somebody else, right? So like that's the whole thing, is that if you want tangible ideas to come in and make money, then day trading is the wrong thing to be doing, right? I would love to see you rant about chart patterns. We kind of already ranted about chart patterns a little bit. The other thing though is that what we've found over time, we have some research to suggest that financial education doesn't work. That like when you give people financial education, that it doesn't actually change their behaviors and result in good decision making. So you have to be involved in it all the time. So I think that one of the primary advantages that you get from day trading actually is that. It's that you are learning about how to manage risk, and you are learning about the market itself. And that translates to better decisions in other areas of your life where it's going to have a much larger effect on your finances, right? So you can come in here and you can lose, $500, $1,000 a year from trading futures, but then you're going to save $100,000, $200,000 when you buy your house. Then guess what? You made money overall, right? It was a worthwhile investment in your education. And I totally understand that that's not what the average person wants to hear, but it's the truth, to be honest with you, right? A couple of famous personalities referenced the one thing that made them successful: they needed to win to eat. Well, the market is a very different beast, right? People need a plan together. Well, I feel that the way that it starts is having a correct understanding of the markets. I don't know, like, is it really that complicated? I feel like you watch the order flow series of videos, you're gonna know more than 90% of retail traders, right? And then from there, I have a video series about developing a strategy. It's intended more from a programming point of view, but it's good to watch if you're going to do things discretionarily, right? And then that's how you develop your strategy. And then there are little tiny details about the market that are hard to pick up, and that's why you watch the stream and we talk about those things, right? Yeah, Mr. M, I saw that this morning. So, here's what's going on. I don't know about this one. Let's talk about this one, because it's going to be a big deal in the future, I promise. Okay. So Japan has been engaged in a policy of excessive quantitative easing for several decades, and particularly in the post-COVID market. So not only are they buying a lot of treasuries to the point that the Japanese central bank is like the only person participating in some of these bond markets now. Okay. But in Japan, they actually own stocks too. So here in the US, the Federal Reserve took on some corporate debt, and I think they already got rid of that, right? They never got to the point where they were buying stocks and ETFs and stuff like that, right? But in Japan, their central bank straight up buying stocks and ETFs, okay? So this presents a problem because things have been doing okay, and the market is anticipating, at least, that the Japanese central bank will be shifting. Okay, so the reason that we've been having all of this behavior at the beginning of this week is because people kind of were betting that the new governor would be a little bit more hawkish and would start talking about policy normalization, and he's kind of ignored that. And that's why you're seeing weakness in the yen, okay? But market still expects them to do it, okay? So how do you do that? How do you normalize policy? Well, that means that you don't roll over your bonds, essentially, right? That's the first thing. That's what happens over here. The US is that the amount of treasuries that the Federal Reserve buys every month goes down, right? Because they're not renewing those. They're not taking the maturities that matured and reinvesting them into new ones. Okay. So that's should have a minimal impact because that's not actively selling into the market. That's just there not being quite as much demand when there's the auction. Okay. You can't do that with stocks, right? How does the Japanese central bank get rid of its stocks without like the whole stock market front running it and selling out? It's a big problem. All right. Now, the Japanese stock market is not expensive per se right now, as we understand it. And so what Warren Buffett is saying is that he thinks that these Japanese companies are valuable and are a good buy right here at current prices, and that they're worth investing in, is what Warren Buffett is saying. So Warren Buffett is kind of coming in at a key time and trying to give people confidence on buying Japanese equities because they're undervalued, right? So the question is, does Warren Buffett's valuation win out in the long run, or does policy normalization cream the Japanese stock market? Right? That's what that's about. And so normally I would be like, well, if Warren Buffett is buying it, then I really want to buy it, etc. I own a big chunk of Berkshire Hathaway, by the way. But I'm not so sure on this one. I'm not so sure on this one. Because I'm really, really concerned about how this plays out in Japan when they normalize policy. A successful trader is a successful human being. Maybe. There are a lot of things about trading that can help you in your other parts of your life. Right? So if the thing is, the average human being is not going to put in the effort to come in here and do it for 5 years and whatnot, right? Then I kind of feel like the other side of it is that they should enjoy watching the trading enough. Well, maybe there's no way to make it that entertaining, but what you would want is you would want them to still be engaged in the financial markets on a regular basis so that they make good decisions when those times come, even if they're not actively day trading, right? So how do you do that? I'm not 100% sure. I feel like maybe I had some successes with that on TikTok with funny videos and, synopsises of what's going on and stuff like that. But it's never really, really broken out. So I'm still working on that one. What I think is funny doesn't always translate to your average person. Right? Like when we were just parroting a your average guru, I think that a lot of people thought it was serious. There's this guy on TikTok that is playing, like, he says that he's queer, but he's like a queer conservative or something like that. And I'm pretty sure that it's a parody account, but it's really hard to tell sometimes, man. If there's a crash coming, the yen would be the first to crash. If there was a global debt / currency crisis, then yes, Japan would be hosed. Yeah. But I don't think that that's what's going to happen. like this is the thing that scares me. The thing that I think is much more likely is just a very long period of below trend growth that creates more central bank easing, right? Because you have to modify the monetary supply based on what's going on, but it also appears that at very low levels, at very low interest rates, it kind of has almost a depressing effect on the economy, where like the economy becomes dependent on it, and anything to try and come out of that just results in more slow growth and pushes you back in, and then they continue to be easy. And then you end up in this trap like Japan has been for the last 30 years, right? Where they can't get interest rates to go up. Now, here in the United States, the situation is maybe a little bit different, right? Because the whole thing has been like they've been having lower interest rates because economic growth hasn't been as high because population growth has declined, right? But the United States has come into this situation where there's a huge spike. Like, this is what's going on that we kind of missed, I think, and I think a lot of people missed, is that if you look at the population distribution, if you looked at like the number of people born, right, you're going to be going up like this, right? And then you're going to get the post-war boom. And then in the 70s and 80s, there was this decline. And then in the late 80s and 90s, there was this other kind of boost. And then since then, it's kind of flattened out. Okay. So when you look at the population distribution, what you get is normally you want a tree that looks like this. This would be like men and this would be like women, and you want something like this where, you know, as it gets older, there's less people. Okay. So for retirees, this small amount of retirees gets paid by all of these workers, right? But what we have instead, actually, let's just pull up a picture. What we have is we have this spike of baby boomers at age 60, and then we have this spike of millennials in their 30s, right? So we have right now in the market the most consumers that we're going to have, like, because the population is like declining now from here in the future, right? You're going to have this problem. So in the short term, over the next 10 years, the problem is probably going to be inflation. The problem is probably going to be meeting supply being able to meet the demand, because millennials are just, purchasing power is just going to get better and better. And as these baby boomers die out and move out of the workforce, these millennials are going to be the beneficiaries of it, probably, right? So their purchasing power is just going to get stronger, and then ever after that, it's just going to be less and less and less. So you're going to have a period of having to raise interest rates, followed by a period of low population growth and thus low GDP and thus low interest rates and quantitative easing and so on and so forth, right? We'll just go back into that, but it will be even worse than it was in the Obama years. And hopefully the stock market does okay in that situation. Did before, so I guess it's okay. But in the meantime, we're dealing with this inflationary thing. And if we're dealing with inflation and get low growth during that inflation period, that's going to really suck. I think that's the bigger risk right now. Steve Leishman, the decline in bank lending looks bad, down 100 billion in 2 weeks, the biggest 2 weeks fall since 2001 and since 2009 on a percentage basis. But loans are still 18% above the pre-pandemic level. Some adjustments was inevitable, will need to be sustained and not replaced by other sources. How did it go with the volumes? Oh, are you talking about the one that we were programming on Friday? So, I can try pulling it up here for you if you didn't catch that yesterday. So I only have 9 months of backtested data. This is backtesting certain volume profile setup where we open above or below the previous day's value area, and then they move back into the value area. So it's kind of a reversal trade of sorts. And I believe this one was the best one. Let's wait, where is it? Let's look at this one just because it has more trades. Okay, so it seemed to work better when your winner was a large factor of what your loser was. Okay, and I don't know, maybe this is not the one that we want to look at either. Let's see here. Target 40, target 40. Yeah, this one. This one's a little bit better because you can see the aberration a little bit better. So with this one, when you look at the cumulative net profit, you do good for a while and you get slaughtered. You do good for a while, you get slaughtered. You do good, and it's not like consistently moving up. So, it doesn't look like a very good strategy, right? I don't think I could say that like it's like an objectively bad strategy. It's just like your Sharpe ratio isn't very good. So like if you make money, like here again, what you're gonna see a lot is that the people that claim to be making money, they say that it's some predictive edge that they have in this analysis that they're doing, when the reality is it's taking on risk. It's the risk management side of things. Is basically you're taking on a lot of risk, but you got to ensure that you don't blow the account and you can make money that way, right? But you're not getting your money's worth, right? You're not getting like essentially a Sharpe ratio below 0.5 and really even to some extent below 1 basically means that you would be better off just putting your money into an index fund, right? That's basically what that means. So is there really an edge in it? And like here's the thing, is like, okay, long trades have worked better. Well, okay, so then those periods where there's been like really strong reversions and like short covering rallies has done well. Probably with day trading, that's, well, no, I mean, the best situation is that you have information that other people don't, and you are informed, and you're making money that way, right? That's going to be the best source of edge that you can find. And you know what? There actually is a lot of that out there, so it's totally worth pursuing, right? But like these statistical setups and stuff that people try and do, we're kind of like, those setups I sent you, you have to consider initiative and responsive participants. Yeah. So here's what I thought was interesting about those setups that you sent me. So first of all, he sent me like 4 strategy PDFs or whatever. Only one of them actually used volume profile. So the other ones were like opening range and stuff like that, right? The other thing was that they had like 2 kinds of setups, but they were really kind of like actually the same thing. Like, so if you're saying, oh, we are outside of the value area, we're going to revert back to the previous day's point of control. Isn't that the same thing as saying we started within the previous day's value and we tried to break out and we didn't, and so I'm trading it on it reverting? So, but that's essentially what this is doing, is it's saying if we started below the previous day's value area, you trade back towards the point of control. Now it's very simple because I'm taking the trade like within a certain set time frame, waiting for some amount of momentum in a certain direction, and there are stops and targets and stuff, right? So you could certainly change it around. We really need more data though. For me to present that in a video, I would really want to have more than just 1 or 2 years, right? But I do not see evidence of a statistical edge in it. What I'm seeing right here is you're pretty close to 50% on an equal risk reward basis. So I've noticed that, say with the initial balance trade and stats, it basically no longer holds up. That might be. So the one that we were talking about earlier is I also have this ICT strategy. And what you find with this strategy, if I can get the chart to show up here, is that it did well for a small period at the beginning of the pandemic, possibly from a lot of retail traders wanting to trade it. And then when it really became a popular thing on YouTube, the strategy started doing terrible, right? So initial balance was kind of one of the more popular things before price action took off. I'm sure that you would probably see similar sorts of things where it's like it seems to perform really, really well, and then there's a period of performance that's so bad that it basically makes you not want to trade it. They say small initial balance, expect a trend day, and a big initial balance, expect a range day, and that's absolutely gone down the. Well, yeah, with the options and everything, moving things, yeah, it really has been, hasn't it? That's, yeah, I can totally see that one, right? See, what I find more interesting is, like, I think that a lot of people's approach to the technical analysis is like, search the market until you find something that seems to work, and then try and understand why that seems to work, right? I don't think that approach is really very effective. I think that really you should have a reason to believe that something is an edge before you even go searching for it, because otherwise, if you go in and you just search through the whole stack for some statistical divergence, you're just very likely to come into an aberration that is mostly luck, right? That's mostly chance, right? The number of if we go out there and we say, okay, here's all of the different types of things that we can look at, and then there's this group over here that shows some aberrations, right? Within that group, there's only a teeny tiny number of them that are actually due to something real, like either market microstructure or some tendency in people, right? So if I am to take 1 point out of that data set there, right, I'm more likely to get luck, right? So it's much better to go the other direction, to be looking at the market and the market rules and developing a model based on those rules, and then finding market behavior that lines up with those rules, which is kind of the approach that they did with market microstructure, right? See, this is what we're talking about when we're saying developing your own strategy, right? The first thing you got to do is understand what we know about the market already. Then you need to understand how to do this kind of research yourself to find your own aberrations. And you're going to go and look for those aberrations on the edges of areas of things that we already know, right? You already know these things, and you say, well, because of this, maybe that means that we might see this. And so then you go and you do the stats and you see that the market actually does do that. Now you have a trade, right? And then the question is, how do you analyze that particular thing in order to create like a good strategy? And this is where the kind of these things like the risk management and so forth kind of really factor in, right? Because if you come in and if I were to change this strategy around, for instance, to say, oh, well, actually, oh no, I do have an R factor on here. If I were to say no stops and targets, just stay in it until the end of the day, that would probably improve the performance, right? It would probably reduce the Sharpe ratio, but the total net that you make would probably increase, right? So you kind of have to understand how these things will change your results so that you can understand the results that you're actually getting, because we think we'll see some results and we think, I figured the market out, and actually you haven't, right? Oh, well, actually the amount of risk that you're taking on is hiding your real performance, right? How I convince more people of that? That's the real question, right? Because you notice people are more interested in talking about why people aren't interested in that than they are in actually talking about that. Oh man. Oh, so do this comment that came a little bit earlier. I got distracted, but Steve Leishman saying the decline in bank lending looks bad. I'm concerned about this. It seems to me that the economy was already kind of moving into a recession, and that the declining that we've seen in bank lending and so forth, I think that over the next few months and by July will really start to look really bad. For now, the market seems okay. So if the market continues to hold up here and here despite that, then that means that we're entering into stagflation again, right? Slow growth, but still concerns about demand, essentially. So at the moment, I guess what I'm saying is that at the moment, it seems like stagflation remains the largest concern in our market. That could change tomorrow, because if tomorrow we see deflation, then we really get into this economy is going into a recession, and some of the data points that people are looking at are just showing it late. And are we going to realize it in time? Right? Oh, the narrative could shift so quickly. It could shift so quickly. What's this? Wow, hedge funds are the most short the S&P in 12 years? Says Zero Hedge. Elizabeth Warren wants progressives to hate crypto. I wish. You know what? So this one doesn't make sense to me. You would expect libertarians to be more into cryptocurrencies, but as far as I can tell, there's actually more Democrats and liberals interested in cryptocurrencies than Republicans. Like, if you wanted to get a demographic really, really aggressively against cryptocurrencies, I would go after conservatives, not liberals. That's just me. Risk of harder landing, IMF cuts. Global GDP outlook warns of heavy downside risks. Okay, so You know, it would be interesting to read these stories, but we don't really have the time. Well, we could have made $10 from here to here, but I said not worth it. I'd still say not worth it, because it just kind of chopped in there ever since then. After I leave, it might continue going though. I'm very, very interested to see what this means. I mean, I guess a lot of this is still like mean reversion. Like, look at where we're at here, right? I mean, they're pushing into the previous day's low, but it's not seriously breaking. So maybe they'll seriously break, and then we'll see. But curious that this whole ramp up is collapsing. What does that tell us about what CPI might be like? Or does it have anything to do with CPI? I guess we'll see. Yeah, have all the bets been placed? It could be. No, you know what? So yesterday, the S&P 500 was doing a similar thing. And then there was a few headlines, and you get the 0-day to expiration traders involved and all of that. And there was like a pretty significant bump up. I think you might see that again today. We'll see. 1 week ago, JP Morgan's closely followed market positioning team warned that risks were growing for a market-wide short squeeze amid stubbornly dismal sentiment, with the bank's John Schigel saying that March was in some ways the mirror opposite of February. Unlike the elevated bullishness that was evident in early February, the bearishness that started in late February continued into mid-March before a reversal took hold. For the most part, flows and positioning saw similar reversals and ended the month at more neutral levels. However, given the propensity for the pendulum of sentiment and flows to swing beyond neutral, it wouldn't be surprising to see the recent rally extend further, perhaps with U.S. high SI stocks, high short interest stocks, catching more of a bid. One look at the Goldman Index of the more shorted stocks that shows that is precisely what happened, if not yet to the extent that was seen in March. Why the latest short squeeze? Simple, because in the past week we saw another cohort of hedge funds piling into shorts en masse, perhaps believing naively that this time fundamentals will matter, before getting burned all over again and being forced to cover. And speaking of shorts, according to the latest CFTC Commitment of Traders data, hedge funds predictably reloaded bearish stock bets, betting the latest market retreat will persist amid worsening economic data and corporate earnings. Narrator, it did not. And as shown in the chart below, large specs, traditionally hedge funds, saw their net short positions in the S&P 500 futures increase to roughly 321,000 contracts as of Tuesday. That was the most bearish reading since November of 2011, which followed the brief bear market in the aftermath of the S&P cutting the US AAA credit rating. Rising bearishness was also evident on the long side of the book because, as Goldman Prime showed, after aggressively chasing the recent rally in tech shares, hedge funds have turned into sellers, unwinding their long positions in the industry at the fastest pace in 15 months while adding to shorts. Yeah, so one of the problems that I see here is, like, let's look at it from a flow perspective. Where is the next amount of money coming from, and that sort of a thing? And while the economy appears to be slowing down, I am not seeing a big enough shift in jobs to make a difference, which is to say, like, how many less people are contributing to their 401k account this month compared to last month? I think it's probably an insignificant amount, right? And so the money continues to come in long. In order to really get this extended downside move that people are looking for, you're really going to need a shock. So that doesn't necessarily mean buy the dip per se, as much as it is, yeah, you're probably going to get this market that like struggles and has like really massive short covering rallies, right? Did we just push to do a new low there? It looks like we maybe did. Yeah, 36 traded into 11. Commenting on market sentiment and positioning over the near term, JP Market Intel strategist Andrew Tyler said that investors remain bearish and the recession narrative was a dominant narrative last week as bad news was treated as bad news. The CPI print should give more certainty around the terminal rate. In any case, even if the Fed were to hike one last time in May, that will be the end. As Tyler notes, typically the Fed pause is positive for stocks. Over the last 4 rate cycles, stocks were higher on a 1 month, 3 month, and 1 year basis by 3.38% and 17.5%. This metric has a 75% hit rate, with March 2000 the only failure of the trend. The pain trade remains higher, and the catalyst could be more dovish than expected CPI print and stronger than expected bank earnings. Additionally, the May 1st ISM manufacturing print is also critical. If the latest print of 46.3 falls to 45 or lower, that would tend to presage a recession. Finally, confirming what was said above, Tyler concludes that positioning has skewed bearish over the last week. Investor conversations reveal an SPX range of 3,800 to 4,200 unless we see a material change from earnings. Translation: unless selling accelerates and breaches key support levels, which are now being defended aggressively by CTAs, which have over 20 billion left to buy this week in a flat tape, expect even more squeezes, although no breakouts, as Goldman trader Bobby Malavi said in a note last week. It increasingly feels like equities are caught in a channel, one that most believe and are positioned to see break on the downside, yet never seemingly does. The prevalent view seems to be that more things will break on the back of tepid rise in the cost of capital. You know what though, Tick Herd, on that point about, like, there are some YouTube channels that have like hundreds of viewers. I do think that some of it is randomness. Because there are a lot of channels that have a lot of watchers that I just really don't, I can't understand anybody being interested in it. So it could be they're just randomly lucky. It could be that they're like marketing really hard outside of their stream, more so than I am. Could be it might not have anything to do with what they're actually doing on the stream. Right? But it doesn't really matter. What matters is, are we getting better at trading? So if you come in here and you feel like you've learned stuff and that you're getting better at trading, then we're being successful, right? But man, it's got to be it's got to be rough for you guys over in the equity futures right now, right? I mean, the treasuries still kind of do a little trends, but the equities are just stuck, and it just looks so nasty. Stuck in the mud. See, now the treasuries are having a little bit of a hard time getting people to sell into that low. I think it might go. We might see a little bit of we might get a little bit of a stop run here before we leave. Well, there they were able to make 11 go offer. When we get 10 half, oh, iceberg. So by the way, here in the treasuries, let me based off of our reading on that story and everything, because there's been a lot of shorts added in the treasuries as well. So if that CPI tomorrow comes up and is dovish, I'm gonna buy those treasuries super hard, right? Because you're gonna get a really aggressive short coverage. But them selling it kind of really seems to be hinting that the CPI is not going to be good. What is the number? What is the number they're looking for anyways? CPI month over month spot 2 versus the previous spot 4 with core CPI month over month expected to be spot 4 versus an expected spot 5. So if it came out and core was spot 4, then that might not necessarily be good. And that may be what the market is expecting. But if it came out to be spot 3, then we could see a really aggressive shift in the market. Yeah. Man, I was just checking my Alice indicator here, like the overall activity in the equity index. It really is low. Like you're getting back to like 5,000 levels. You can get into like 1 to 5,000. That's usually not good trading. All right. Anything else before we get going for the day? Traders fully price a 25 basis point May hike, ECB hike for the first time in 4 weeks. Okay. One last thing to read before we go today. Bitcoin, Ethereum, and other major cryptocurrencies have rocketed higher over the last month, part of JP Morgan catastrophic doomsday scenario that could be just getting started. Bitcoin prices topped 30,000 per coin for the first time since June, after Coinbase chief executive Brian Armstrong confirmed long-awaited Bitcoin upgrade, and Ethereum tweeters on the verge of its own game-changing update. The broad crypto boom over the last month has largely been put down to rising expectations that the Federal Reserve will soon ease up its program of historical interest rate hikes. Now, as traders brace for the latest inflation data, that could cause Bitcoin, Ethereum, and crypto price chaos. One closely watched analyst said there could be another overlooked catalyst behind the crypto rally. And they're not going to tell us what it is. Never mind. Shouldn't have read that to you. I got clickbaited. Gosh, curse you, Forbes. Curse you. How do they not see the value in this, though? Oh, it was like I think that Uzi is right. What he was saying earlier is that people want to be shown a little visual pattern that they can just follow and make money now. They're not in it for the long haul, and they're not in it for their interest in the market itself, right? They want money now. That's what I should be doing, man, is I should just be teaching programming and shit. Like, people want to make the money. Show you where the real money is at. Go learn to code. Don't let ChatGPT scare you away. I promise it's overhyped. There's still plenty of money over there. Although the job market doesn't look so hot right now. Just putting some temper on that. The job market over the last like 3 months have been. Okay, I'm never gonna stop trading. Well, I shouldn't say never, but I have no intentions of stopping our morning live stream or changing anything about it. There are things that we can do that make the stream more effective for both your learning and my performance. And when I say my performance, I mean making money trading. Then we do it. But otherwise, I'm not going to do things that increase the popularity of the stream but don't help you in trading, right? I was not a quant dev. When I was a developer at the bank, we were primarily involved in the exchange connectivity. So I was mostly involved in exchange connectivity and testing that, applications for the developer that tested that, and then risk management programs. So things that would stop you from entering orders if you were over your risk limits and whatnot. That's primarily what I did at the bank. So I'm kind of in an interesting, this is why I'm able to do what I do, is I'm kind of in this interesting intersection where I knew enough and I had a really strong interest in it to kind of see how things were done at the bank. But I wasn't deep enough into it that it caused me problems for me to come and tell you, right? But I tell you what they do over there is they see a research study came out that week and they read it. And then they say, oh, hey, let's try incorporating this into our algorithm. That's what they do, guys. It's no joke. Okay. I got to get going. Tomorrow, CPI will be a huge deal. So I will see you guys then. In the meantime, stay excellent.